Hey guys, how are you doing? It's Michael here. Welcome to the Trading and Investing with Miki Kac's webinar. This is a recorded webinar, but we're watching it all together live so I can answer all of your questions in real time. I got with me the translator, so any one of you who doesn't know English can definitely ask any question in your language, let's say Russian, and from here you will get the answer in Russian as well. So I'm super excited for this webinar. This is the first one that I'm doing to a Russian audience, so I'm a bit nervous, but let's dive right to it. Okay, so for those of you who don't know me, my name is Michael Kacz, or Miki in short. I've been a trader and investor for many years, almost 13 years now. So most of my adult life, this is what I've been doing, day in, day out, trading stocks, commodities, futures of all kind, indices, and also Forex. I didn't do yet options, but definitely will do it later on in my life. Other than that, I developed the Nostra teams here in Israel. Basically, a Nostra, for those of you who don't know, is a company that have traders that been trading on the company capital. So I developed those teams, taught them, showed them how to become a profitable trader. And right now in Israel, there are about 400 traders, Nostra traders, that was under my supervision. I also created the independent trader software that's basically a semi-automatic system that help and manage the trade for you, and you will see it later on this webinar. And I've been a mentor for more than 900 pro traders. Most of them are here in Israel, but definitely there are some across the world, and this is what we're aiming for right now. So what exactly are you going to learn in this webinar? First, I'm going to answer the big question: can you really make money in the financial market? Obviously the answer is yes, but I want to show you what you need in order to make money in the financial markets. And it doesn't matter if you like to trade Forex or futures or stocks, and it even doesn't matter if you trade the US market or European market. At the end, there are a set of rules that you gotta have as a trader to become profitable, and we will discuss this in a second. Other than that, we'll talk about the three big lies that everyone is spreading all across the media lately, and the 5 rules that you have that can make you money consistently in this market. But first, let's start from the beginning. Some of you doesn't know what a financial market is, so let's discuss this for a second. The markets basically that we have, the major markets, are in New York, London, Frankfurt, Shanghai, and Hong Kong. The assets that you can trade are stocks, futures, Forex, options, and bond. There are plenty more, but this is the majors that everyone is been trading on. And the participants in the market are the banks, hedge funds, investments, companies, and retails. The retails are basically us. So those are the guys that been trading the market day in and day out. And we have several of assets that you can choose from. You can make money on stocks, you can make money on futures, on Forex. It all depends on what you like, what you want to do, and we will get to that later on. So basically each one of us as traders, each one of us will become an individual. I got traders that have been trading with them for more than 4 or 5 years. They know exactly what I know, but they will trade different thing or similar to what I'm doing, but basically with a twist of their own. So each trader is an individual. It's important to remember that. You will also find your path, your way to that point, to that point that you feel comfortable and you have basically your niche. So in the financial markets, and it doesn't matter which market and which asset, it all comes down to this. The guy that you see in the picture right now, his name is Charles Dow, the half of the Dow Jones index, the one that built it. It was here about 150 years ago. It was a journal, financial journal obviously, and also private or retail investor. And he developed a theory that have 5 principles, but we will discuss the most important one, the second principle of Charles Dow. Charles Dow is basically saying that the market, and it doesn't matter which market, is going in circles all the time. At the bottom we have the disdain. Most people are afraid to get in the market, they are more cautious, they are more skeptical, and as soon as we see that the market is moving higher a little bit, then they get in more confidence and starting to buy more, and the retails basically are getting in and wanna jump on the train. But as soon as we climb in more and more to the peak, then people are getting much more confidence and convict that the market will continue higher, and then you can see and hear that everyone is jumping in and want to buy a piece of that market or a piece of that asset. But that's also when the greed is taking control, the emotion, the greed taking control of us, and basically everyone wants to make a whole lot of money, so they doing it and buying it, and doesn't matter in which price. This is exactly the point when we're reaching that peak, and what we call dumb money are getting in this stock or in this future contract or in this market, buying, and basically the smart money is selling them. Because as you may know, a transaction in the market occurs only when you have a buyer and a seller at the same price. So on each buyer in the market, you also have a seller. So at that point, when the price is reaching a new peak, new high, at that point when the dumb money are buying, there is smart money from the other side that's selling them their stocks, their positions basically. But then the price is dropping down again, and most people are getting fear and shock and are probably losing money. So what they're doing in that point is basically selling everything they got. From the other side, like we said, if you have a seller, you gotta have a buyer. From the other side, the buyers that coming in and buying in a low price, that's the smart money. That's the people that are understanding this cycle and momentum in the market, and this is why they basically taking advantage of the dumb money, that making his decision by emotion, by fear. Okay, so what we're looking at right now, it's the SPY, the ETF for the S&P 500, meaning the largest 500 companies in the US market, and the chart represents a little bit more than 20 years. Now you can see the first crisis that occurred in the 2000, the dot-com. Most people saw the price rising and the market is basically climbing. Now it went all the way up to that peak, and in 2000 most people thought that the technology prices are going to surge up much more, and this is why they basically bought it at the peak, at the high. Now again, dumb money are buying at the peak, while smart money that understanding that it will take time for technology to take place, basically selling their position to the dumb money. And this is a classic Dow theory that we just spoke about. At the beginning, most people didn't know if they can really jump on that train, if the train is really going to drive fast. But then when they already decided to jump on that train, it was too late, because the smart money started to sell their position. The same occurred in subprime, the 2008, the famous crisis of the banks. The price started to climb up. Then we reached to a certain point where most people thought that the price will go much higher than that, so they bought it in any price. Doesn't matter, just give me the market. And when they bought it, the smart money started to sell their position, and basically we had that crazy crash. Now look at the bottom here. When most people were down 10% on their portfolio, 20%, 30%, 40%, 50%, they obviously got scared. Then they sold their position, their portfolio, and from the other side, the smart money said thank you very much and bought everything, and then the price started to climb again. Classic move, exactly what we discussed right now on Charles theory. The same happened with the US-China war trade. The price declined majorly. Most people at the beginning thought that the price will go much higher, It went all the way down. People thought this is it, another crisis is coming, so they started to sell their portfolio. And when they're selling, the smart money getting in the position, buying everything in low price and moving the price higher. And right now, the corona crisis, exactly the same. Before the price declined, we had a nice momentum move to the upside. Lots of people all around the world thought that the price will go much higher than that, but then the corona dropped the price down. They bought it. The smart money that understood sold their position at the top, and at the bottom, when most people thought that the price will go much lower than that and sold their portfolio, smart money bought it in a crazy price, $260, and we all know the result right now, new high every week or so. So the cycle of Charles Dow, what we just discussed, is working completely, and we saw it for 150 years. I'm just showing you the last 20 years, and it should definitely work the same on the next crisis and on the next crisis and so on. But I got a question for you right now, and I will answer it live in a minute or so. My question is simple. Why do we have that cycle? Why every time that the market is moving higher, it declines? Why when it's crashing down, someone goes there and buy it? Who basically moves the cycle? What created this cycle, and why we should see it also in the next 10, 20, 100 years from now? Give me your answer in the chat box, and I will answer in a minute or so. So if you understood the last slide that I just spoke about, you probably understand that it's possible to make money, but you gotta understand how to do it. First thing first, you gotta understand where are you in that cycle that we just discussed. Are we in the bottom of the prices where the fear becoming real and most smart money are starting to buy while the dumb money is selling his shares? Or are we at the peak when most people are getting greedier and greedier, and that means that the price will decline later on? So you gotta understand which emotion is activating right now the humankind, the fear or the greed. Or maybe we're in the middle of it when we are getting confidence and the price will continue to rise. So you gotta understand where in that cycle you're in. The second thing that you gotta have is the right tools, like in any other profession. For example, if I'm a Formula 1 driver, I got the car, I got the gear that I'm wearing, I got the helmet, and so on. So in our profession, it's basically strategies, and the arsenal could be the platform that we're working with, the semi-automatic platform that manage our trade, the charts, and so on. So if you don't have those right tools, you probably will end up losing the race and not winning it. So simple as that. The third thing that you gotta keep in mind is, are you trading in the right place? Or basically, what triggers everyone else right now in the world? For example, like I spoke about in the weekly reviews lately, the vaccine, right? We had the coronavirus, lots of companies are in a race to supply as many as vaccines for that. So a lot of people are looking at those companies, and most of those companies are running crazy high or dropping down. But there is a special momentum right now going on in this sector, in this area. So you gotta understand what triggers most people around the world. Fourth thing that you gotta have is set of rules. Every trader have a set of rules of do and not do, and we will discuss that later on. And obviously a state of mind of a winner with a high level of discipline. If you want to become profitable, if you want to win in this market, you gotta understand that your mind should be focusing on winning the whole time, exactly like in any other sport, like Messi or Ronaldo or LeBron James. Each and every one of them are always thinking of winning and becoming better and better every single day. When you do that, when you consistently thinking of becoming a better and improved version of yourself, then your state of mind is a winner state of mind, and then you can definitely perform like a winner. Okay, so first let's talk about the place you want to be in. you gotta have a certain of a field or sectors that you see that most people are interested in, because we are looking for the momentum, we are looking for the hot place to be in. So I divided it to 4 sectors that I'm watching right now. Obviously the percentage will be changed over the years or over the months, but we can look at definitely the technology, right? At least 40%. We're talking about smart homes, we're talking about communication, payments like PayPal, Square, Cuervo. Those companies are climbing up majorly because everything becoming much more digital and less, for example, for the payments, less cash, right? Most people are handling credits and other things like PayPal and stuff like that, digital banks basically. So those companies are going higher. So let's talk about smart homes, for example. In the US, they ran a survey saying that 60 or 65% of the population there don't have a smart home yet, but we can definitely see the trend that moving much higher every single year, and most people, most of us all around the world in the next 10, maybe 15, the top years will have smart homes. So basically we will control our home from every function of it from our smartphone, and this is basically a smart home. So all this technology will climb up the next few years, definitely. Communication, internet and cellular, the 5G that most people are starting to work with, high-speed internet and so on and so on. So technology is definitely here to stay. Let's talk about plant-based, for example. As some of you know, I'm vegan, so definitely I'm looking at those companies from vegan replacements, meat replacements like Beyond Meat, VRFFY, that I gave you 2 or 3 weeks ago that made almost 70%, QSR, TSN, lots of companies that are getting into that field as well, this sector, and you can see more and more companies that starting to develop meat replacement or eggs replacement and so on and so on. So this is definitely something to watch for as well. The green energy like vehicles like Tesla and NIO, Nikola, GM, lots of companies that are into that all over the world, also producing solar clean energy, so from solar, from the sun. And we also have the biotech that we just mentioned, like vaccines or heart disease and lots of other solutions that those companies are developing right now, and it will be definitely here for a long time. So here are some examples that I've been trading for the last few months on those companies, exactly the one that I just mentioned, because I understand that this field is the one, the sector is the one to be in. So for example, you can see the trade that I made on NIO, entered here. It's a bit tiny, I hope you can guys see it at home, but I entered here, then got out here, then got out here. Those are day trading basically trades, but you can definitely do them as a swing trade, meaning hold it for a few days or even few weeks. And if you are a long-time investor, you can definitely consider those sectors as well. So I traded at Tesla with a high momentum, almost $40 that it made that day. Solar Edge, also from the green energy that I've been trading. Nikola from the electric vehicles. First Solar as well, and Qualcomm. So lots of technology with energy or with meat replacement or with biotech. So a combination of those sectors will definitely lead the way for the next 10-15 years, and you can definitely use them to your advantage. So before we'll continue, I got a question for you. Write your answer in the chat box. What do you think is the hottest, or maybe the 3 hottest fields right now in the financial markets all around the world basically? And I want you to think about the sectors that will be here from right now till, let's say, the end of 2021. Write down your answer in the chat box. I'm waiting. Okay, so what are the three big lies that most of you already heard it, but probably some of you fell into that trap? First of all, most people are saying that you can make money by learning from YouTube, and sorry to break it down for you guys, but you cannot. You can learn trading, definitely. There are a lot of materials on YouTube. Some of them are worse and you don't need to listen to them, but some of them you can actually get stuff from them, but you cannot really, you can reach a certain point of learning from YouTube. You cannot really making a living and making money consistently by just watching some YouTube videos. So you can learn the basic, you can learn the concept, but only to a certain point, so you gotta remember that. Second thing is there's a holy grail, and if you will have it, you will become profitable. Obviously, that's a nonsense. There is no one way to make money in the financial markets, and again, it doesn't matter which asset are you trading. There are tons of opportunities and tons of ways to make money. You gotta find your niche, you gotta find the system that works for you, you gotta understand the set of rules that works for you, but not a holy grail that if I will know this strategy specific, I will make money. No, you gotta understand much more than that to become profitable. So let's take a simple example, the holy grail from let's say basketball, NBA. If you know how to shoot, how to throw a ball, it doesn't mean that you are a great player, right? You gotta understand much more things than to become a great player. You gotta know how to steal the ball. You gotta know how to defend. You gotta know how to fake your shot and then throw it. You gotta understand the whole game, the team that you're working with, the clock that is running, and so on and so on. So if you know how to shoot a ball, it doesn't mean that you're a great soccer player or football player and so on. Depends on which country I come from. The third thing that you gotta understand, that it's also a big lie that I've been seeing on social media that run in, that you can become a millionaire in 3 months. You probably already saw those videos that showing you a nice Ferrari or a jet plane and lots of cash running around and telling you, yeah, you only gotta do one thing and you will become a millionaire. It doesn't work like this in any field, in anything in life, so probably in the market it won't have work like this as well. If you want to be a professional, you gotta work hard, you gotta give it your all, and you gotta love doing that as well, and definitely not become a millionaire in 3 months. It doesn't work like this. So if you have at least one of them in your mind and you thought that you can become profitable by learning from YouTube, or there's a holy grail or a millionaire in 3 months, take them out of your mind, because we're here to do it the right way, the professional way, and not by dreaming on big boats and jet plane just because someone on YouTube told us that. And he probably rented this Ferrari for 500 euros and he told you that it's his. Okay, so we mentioned before that we gotta have sets of rules and tools in order to become professional, in order to become profitable and make money. So let's talk about this right now. And these are the rules that any trader should have. And again, it doesn't matter if you will trade Forex or commodities or stocks, the US market, the European market, or Asia. At the end, there are sets of 5 rules that each trader have to have. So first thing first is finding the one. You gotta understand, how do you find the right asset and when do you find it to trade it correctly. And we will discuss it in a second. Second thing is risk management. Risk-reward ratio, meaning how many money I'm willing to risk to get X amount of money when I'm winning. Third thing that we gotta have is a proven form of proven pattern that basically we will see on the charts, and we'll understand that when we see it, we have chances much higher for winning than losing. Fourth thing is using technology, definitely broker or semi-automatic software or anything that will give us some edge and leverage of others. And finally, probably the most important one, track your trades to keep improving every single day. If we're going again to the soccer or football, Ronaldo have probably 5 or 10 statisticians around him that analyze every single thing that he does on the field, so they can actually tell him every single game where were his weaknesses and his strongness. That way he can take this information and with his coach become much better every single day. So let's break down those 5 elements. The first one, finding the one. How do you find the right asset to trade on or to invest in? So we got 3 parameters that we want to watch for. The first one is catalysis. Why are people all around the world are interested in buying this asset? What is the catalysis? What basically is the news? What makes most people want to jump in and buy this asset? The second parameter is the volume. So for example, in stocks, how many shares switched hands from buyers to sellers in a given time? So we want it to be the average, at least 500,000 and above in one stock, for example, or in one future contract. In Forex, you only get the volume from the specific broker that you're working with. So this is also important to work with a major broker and not someone small. The third parameter that will give us the right asset to trade on is a clear way. When I'm saying a clear way, it's basically looking at the charts and see if there are any sellers that can block the trade, and when, let's say, the price will climb up, are there any sellers that are waiting to dump their shares, for example, their positions, and will basically block that trade from continue higher and higher. So let's look at some real examples to understand it completely. So right now we are looking at YNDX. That's a company I traded this month, and here on the right side you can see a 1 hour chart, meaning every bar represents 1 hour of trading. On the left side you can see the daily chart. Every day, every bar represents a day of trading. At the bottom you have the volume, what we discussed right now. So you can see on average it got about let's say 3 million shares that are switching hands, and we talked about at least 500,000. And the catalysis, that's the first thing that we are watching. So here on the news you can see that lately that stocks was on the news because Bank of America, for example, upgraded the stocks from natural to buy. So Bank of America, one of the largest banks in the US, upgraded this stock and told everyone around the world that he recommended to buy this stock. That's basically what he's saying. So when most people around the world are watching the news and seeing that Bank of America, a respectable bank, saying that this company should go higher, they definitely buying these stocks, and this is why it's starting to move majorly strong. So you can see the trade that I made at the bottom, more than $12,000, and it was for a few days, not just 1 day, about 7 days of trading. At the end, that was a crazy trade that I made. And you can see on the left side, on the daily chart, we didn't have any interruptions, anything that can block this trade. I entered here around $65, and you can see that as soon as it broke through that 66 level, and it was pretty easy, nothing to interfere it all the way up to the last time that sellers became aggressive around the $71. So basically I knew that if these stocks is going higher and Bank of America is saying it should, so lots of people will go and buy it, and I have obviously the pattern that we will discuss right now. So the daily chart was clean, out of sellers basically. I had the pattern that we will talk about in a second, and the news that pushing the price higher as well. Here you can see another trade that I made, and the symbol is a INFO, info, and again the daily chart on the left side, super clean, nothing to interfere it. It's actually breaking through a new high, and the news that covering and saying for the last few days or weeks is talking about a merge between two companies. So as soon as a rumor for that deal is becoming real and getting into the market, then you can obviously understand that lots of people all around the world will want to buy this stock. And when you combine everything together, the catalysis, the daily chart, the pattern that we will discuss in a second, then you'll get a trade. In this case, only $200, a little bit more than $200, again, intraday trade. We will get to more live trades that I made in a second, but let's talk about the risk management first. So when it comes to trading, one of our elements is risk management. We gotta have the right risk management in order to become profitable, and let's cover this subject because it's super important. Okay, so first thing is the risk. How much money I'm willing to lose in case the trade will go against me. Most people don't have it in their head or written down, and basically when they enter the trade, it could easily go against them, and instead of losing $50 or $100, they are basically losing their whole account. And you maybe heard about those people that basically blew out their accounts just because they didn't have the right set of tools, but the right risk management. Didn't think about how much money, if the trade will go against me, I'm willing to lose. And when you set this amount of money, and it doesn't matter if it's $10 or $1,000, it depends on your pockets, right? So if you set this number and you have it in your head, you gotta always work with that number. Obviously, as soon as you continue to improve, you increase that price, this number, but you gotta stick to it when you are trading. Again, it could be $5 if your account is small and you're a little bit afraid at the beginning. That's fine. Or it could be $5,000 if you got a big pocket. But if you don't have it written, if you don't have it, the number in your head, and you're working with it, you cannot win this game called trading or investing. Simply as that. Second thing that you want to know is, what are you aiming for? If, for example, you're risking $100, how much money you want to make on your winning trades? We'll discuss that in a second. The ratio is basically the difference between the risk that you're taking and the reward that you're getting. And one more thing in this equation of risk management is the success rate. The difference between your winning trades and your losing trades. Let's dive into it. So the risk unit is how much money you are risking in one trade. Let's say $150 for this example. The second thing is the reward. And listen carefully. On every dollar that you are willing to risk, you want to make at least $1.5, meaning $1.50. On every dollar you are risking, or every euro that you are risking, you want to make at least €0.5. And that's super important to understand that and to work accordingly. Okay, you don't want to make less than that. You can definitely make more than that, but it's important to keep that ratio, the dollar risking, the $1.50 profit, okay, or the euro or the ruble. And the last thing is the success rate. With that work of a 1 to 1.5, you can aim for 50% success, meaning win 50 and lose 50, and with that ratio between the 1 and 1.5, you will make money. So let's look at that example. 100 trades, I won 50 of them, I lost 50 of them. Each trade risk is $150, meaning on my losses, I lost $7,500, but on the profit, it's $11,000 profit. So the difference between them is what you obviously left in your pocket, less the commissions that should be around $300, $400, $500 plus minus. So this is a screenshot from TraderView from one of my accounts. TraderView, if you're not familiar with it, with them, are basically a company that you can upload all your trades to their platforms, and it's analyzing and helping you to analyze and give you more statistics, what we discussed earlier. So for example, you can see almost a $5,000 profit, and you got about 280 trades, like 50%, as you can see, 49.8 winning, and at the bottom here also 50% of losing trades. And at the end, you can see the K ratio and the profit factor that is super profitable. So this is why even with a 50% success rate, you can make those numbers. And you can see here that my largest profit was about $500 and my largest loss was about $200. So the ratio, the difference between my winning and losing gave me the opportunity to make almost $5,000 even with a 50% success rate. Now let's talk about the pattern. The third thing that we said that we gotta have is a right pattern that we can work with. Simply as that, the pattern have lots of benefits. It's repetitive, like we just mentioned in Charles Dow. Everything in the market is repetitive. So as soon as you have something that you know that will continue to occur, then you can start building on it. It's pretty easy to identify it. We got a clear understanding of the entry price and our stop loss price. The stop loss is the protection order, basically when to get out of the trade in case it didn't go to our favor. You can find it anywhere. It fits all markets and all assets. So if you're trading Forex, you can definitely work with this pattern that we will discuss in a second. If you trade in futures, if you trade in the US market or the European market, it doesn't matter. It works everywhere. I've been tested it. And as we discussed earlier, since humans are controlling the market, then you can see the repetitive patterns occurring all around the world. It's also super easy to track and build statistics on it and then know when is the right time to enter and when the pattern is working more efficiently than some other times that not. So all of these are super important for understanding the pattern and also building and improving for the long term. So we have only 3 rules that we gotta understand for the pattern. The first one that we want to see at the beginning of the pattern, the building of the pattern, we want to see a strong and full candle. That means that we want to see a move high of a strong momentum coming into that asset. Lots of people are interested in buying it. They're pushing the price higher, and then you can see a green candle or the color that you're working with, strong momentum move up, and this is what we are aiming for. The second thing is the consolidation. Consolidation is basically a move sideways, a narrow move sideways of between 2 to 6 candles. And basically when you see this narrow range, you know that the price is accumulating or taking, it's like in a sprint run when someone just ran sprint, that's the first candle, the strong and full candle, and then when he's catching his breath, that's the consolidation. He's accumulating more oxygen to his lungs so he can run faster the next time. The third rule that we want to watch for is the volume. When we're looking at the momentum move higher, we want to see increase in the volume. We want to see lots of participants coming in and buying and moving that stock. When we are looking at the consolidation part, we want to see a decrease in the volume. That means that not a lot of people are actually excited to sell their shares. They're just selling just a little bit, but not as heavy and without crazy momentum to the downside. I hope it makes sense. Let's see some examples. So the first thing, like we mentioned, the first rule is strong momentum move. So you can see in each one of those stocks that have been traded, you can see a nice momentum move from the beginning. Big candle pushing higher, big candle pushing higher, big candles pushing higher, and also here you can see the same thing, repetitive pattern. You can see it over and over again. And look down and you can see the volume. The volume, as I mentioned, the number of shares switching hands from buyers to sellers. So the volume, we want to see a high volume coming in when the price is moving higher. The same occurs here, the same here, high volume every time when we see the momentum strong candle. The second rule that we have is the consolidation. So on the consolidation, 2 to 6 bars, you can see narrow range move to the right side, obviously, and in each pattern you can see it occurring, the consolidation, narrow range, super narrow range, and look at the volume, low volume, low volume, low volume in each one of them. And this is why you want to work with a pattern, a repetitive pattern that shows you that every time you see it over and over again, your eye can easily catch it, can easily adjust to it, and then it will be much easier to know how to throw the ball, basically, or to shoot the ball, right? So this is exactly what we are looking for, and you can actually find it even one more time here. Nice momentum move to the upside, the volume is also increasing, and when consolidating, the volume is dropping down right here, and it popped all the way up again. So this is the pattern that we want to work with. I call it the Bcc pattern. You can definitely again find it in any market, in any assets. You just gotta know how to recognize it, and obviously combine it with the risk management and finding the right one, and not just some random stocks. Now remember that you can find this pattern all around the world in any asset, but you gotta understand which asset is the right one to trade on. So it's important not just to go by the pattern, because lots of people are mistaken by that. You gotta understand that if you find the right asset and you find the pattern and you have the risk management, only then you can become profitable, and it's important for you to remember that. Okay, so let's talk about the entry price and the stop loss price. It's pretty simple, straightforward. The entry price will be above the consolidation, and our stop loss, the one that will get us out of the trade in case it won't work, will be below the consolidation, simply as that. Now you want to also watch for the CNTB close near the break, meaning you want to see the last candle before the breakthrough of the consolidation is closing as closer to that break. You don't want to see a red candle dropping here and from that point breaking through it. Let's look at the charts again. So as you can see, each one of them is closing closer to the breakthrough of that level. This one was amazing, closing right at the peak of the consolidation. Also here, we are closing very close to breaking through that level. Okay, this is not a red candle that dropping down and then breaking through the level. We want to see the last candle closing as closest to the higher point of the consolidation. So let's look at some real examples. Okay, so we are looking at Rocket Pharmaceuticals, RCKT. You may saw my video that I've been trading it live the other day. Now before going to the chart, let's hear the name of the company again. Rocket Pharmaceuticals, meaning a biotech company. And like we mentioned before, biotech is a hot sector. Everyone is watching it. Now we're diving into the news, and you can see that Chardon Capital maintains buy on Rocket Pharmaceuticals, but raises price target to 56, and other analysts raised it to 65 from 45. So basically lots of people are interested in buying this stock because analysts are telling us this should be a hot stock. So if we dive into the chart, you can see the momentum move up that we discussed. That's the first rule that we need. Then the consolidation. This one is only consolidated with one candle, and like I told you, we are looking for two at least, but that was just the beginning of the day, and the momentum was so strong that I jumped in as soon as we broke through the level of the consolidation with a stop loss below it, and you can see almost $500 profit, and that took me about 5-6 minutes of trading total. So lots of momentum. The catalysis was great. The breakthrough, the move strongly momentum, the consolidation, and then moving higher. And again, when you are thinking of the risk-reward ratio, at least 1.5 that you're making, that way you can make money. Amazing trade that I had on the Fossil, FOSL. So I entered, again, it broke through a certain level all the way up with a nice momentum. You can see the volume increasing here in the green candle, then decreasing on the consolidation, and I got in this point, breaking through the level. This is a 3-minute chart, so every bar represents 3 minutes of trading. So in my pocket I had almost $1,400 and also unrealized $140, and this is again combining the news, in this case results from reporting, the earning reports, and the pattern that we are talking about, and the risk management. So that was also a nice trade to take. Let's look at one more. ICPT intercepts pharmaceutical, again pharma company. At the beginning of the day, a major news pushing it higher. You can see on the news that Oppenheimer and BOM and Wedbush, they're all adjusting their price higher than what expected. So basically lots of people are in for that treat and want to buy the company. Again, this is really in the beginning of the trading session, and we are looking at a 2-minute chart. So I waited only one consolidated candle moving higher, then on the consolidation low volume, and you can see my profit here, $415. Again, it took me about 6-7 minutes to do so, but only when you combine everything together, the right place at the right time. And here you can see 2 trades that I took the same day: Upwork, UPWK, and Expedia, EXPE. Both of them were great in different time frames. The one here, Upwork, were in 2-minute chart. Again, nice momentum move to the upside, consolidated with one candle. Again, the beginning of the day, lots of momentum, so I want to push myself just a little bit more, and made about a little bit more than $300. And here on 1H, meaning every bar represents 1 hour of trading, I took Expedia for that move, up move, then consolidated shortly, and almost a little bit more than $200 for that trade as well. Pretty nicely combined that day is more than $500 in the pocket. So this is exactly what we are looking for and aiming for: catalysis combining with the pattern, combining with the risk reward, and then we can get real result. So if I'm concluding for this part, finding the right asset, the catalysis, the pattern, wait for the complete pattern, and then risk management with at least 1 to 1.5 ratio. Let's look at a live trade, just 30 seconds of it, so you can see exactly how I've been doing it in real time. Okay, so this is a trade I made on ICPT. You saw it earlier in a 2-minute chart. This is a 1-minute chart on the left side. And right now I'm just changing the orders and basically placing the orders in the TIT, the independent trader software, the one that I told you about, that managed the trade for me. You can see the nice momentum move up. You can see the consolidation, the daily chart at the bottom. This is how it looked like in real time. This is ICPT on a 1-minute chart and on the daily chart. Now, as you can see right now, I already was in a loss on XPER. I entered it, lost about a little bit more than $200, and on ICPT I'm already in profit, not in my pocket, in about 240 or 265 right now. And what I want to show you here, that we discussed the risk management, the right risk management. Right now, when I'm stopping this video, I'm already up $360 comparing to the $200 that I lost earlier. So this is just unrealized, so it's not realized yet. I didn't put it in my pocket. But you can understand that if I closed this position, I would have made more than what I lost, and this is the whole game of risk management. Like I mentioned, if I are willing to lose $200, then I want to see my profit at least $300. Let's continue and watch and see what happened. ICPT went higher and higher, and basically making me much more than what I lost on the first trade that I made. and you can see it on a 1 minute chart. Here is where I entered, and this is the price of the stock that are moving higher. Now I'm not doing anything because the TIT, the independent trader, does everything for me. And at the end, as you can see here, I made about $415 profit and lost $213, meaning almost double what I lost. Okay, and this is the whole game of risk management. Instead of just making 1.5, I actually made almost double the amount I risk. And when you have that, you can definitely stay on the 50% success rate and become profitable. Actually, when you're taking a 1-to-2 ratio, you can make about 37% success rate and still be profitable. You can decrease your success rate if you're aiming for a much more higher risk reward ratio, right? So if you only have 20% success rate, it's easy to get 20%, but if you're only standing on 20%, if your risk ratio is about 1 to 3, so on every $200 that you're risking, you're willing to take 600, then you can be easily profitable every single time. So it's not just about how many wins compared to how many loses, it's more about the ratio play, the ratio game. Okay, so now I have a question for you, or maybe you have a question for me. But Michael, if it's that simple, why not everyone is making money? So first of all, we discussed those few principles that every trader have to have, and not all of them have it. But other than that, we have at least 5 more things that basically blocking the way to become successful. First thing, we discussed it a little bit before, lack of discipline. Don't have the right state of mind, and most people just don't have it. Let's take a gym or a diet or a cigarette. If you want to quit smoking cigarette, if you want to lose weight, if you want to become more healthier, most people are doing it for 3 days, a month, 2 months, and then quitting. They don't have the right state of mind to become better person, an improved version of themselves. And it's hard. Obviously, it's super hard. Each one of us are taking it to his direction, but you gotta work on it. There were times that I stood in front of a mirror and just talked to myself and told myself, you can do it, you can become more better version of yourself, you can become profitable, and so on and so on. And I didn't have any guidance or any support environment or anything like that. I just stood in front of a mirror and talked to myself. So you gotta have this discipline and the state of mind that want to be a winner, basically. Lack of supporting environment. Most traders just sit at home and don't have anyone to talk with. Even the best players all around the world play with a team. So if you take Messi, for example, and you put it in a different team, he might not perform as better in Barcelona as, and you can actually see it in Argentina, for example. So the team, the supporting environment that you have, is super important for your success in anything that you do in life, actually, right? Lack of guidance. No one become the best by himself. Everyone needs a coach. Even the biggest and the greatest one from each kind of field that you're thinking of right now, gotta have a coach in order to become the best. Usain Bolt probably wouldn't be the greatest runners of all time if he didn't have his coach. Michael Jordan as well, Messi, LeBron James, all of the big names that you know and maybe admire for that reason or the other. At the end, they gotta have someone that knows the game, someone that can coach them and give them his guidance in order to improve all the time. So it's important to recognize that. Lack of understanding of the market. This is something we discussed with the Charles Dow theory. You gotta know when to become aggressive and the times that you wanna sit on your hands or on the fence and basically wait for the next opportunity. You don't wanna trade all in when you see the peak, and you don't want to sit on the fence when you see that the market is at the bottom. You want to start buying it basically and accumulate like the smart money. And the last thing is lack of tools. You don't want to go to war without an helmet. So the same thing applies here. you cannot trade without the right broker, without the right orders, without the right platforms, the charts and everything, the right information. If you have the right tools and you have the rest of the parameters that we discussed, only then you can become a trader and then improve and improve until you reach that success that you're aiming for. Okay guys, so this is it. I hope you learned a lot from this webinar and took the important tools that I gave you in order to trade and invest properly this year. If you want to elevate your trading, you can leave your details below or click the link to see our full services. I'm talking about the trading room, the full weekly review, the daily email list with the hot stocks to buy every day, and of course our full courses on day trading, swings, stocks and futures. So go ahead and check that out as well. Make sure you subscribe to our YouTube channel and Facebook page to get more content for free. I'll see you next time. Take care. Bye bye.